Let's get an investor take and an analyst take. Jason Ware is the CIO at Albion Financial Group, which owns shares of Disney. David Joyce is a senior analyst at Seaport Research Partners. Good morning, gentlemen. Great to have you both here. David, I'm going to start off with you. You recently raised your price target on Disney up to 108, but you're actually lagging the rest of the street. The consensus is about 111. What are you seeing in the stock? What are you thinking about what we're going to get from earnings?
Well, I think the company has gotten past a few issues, or at least the market has come to accept that we're not going to have such a bad showing at the parks. I think that the park spending is still pretty stable. I think that the attendance has been stable, but they still do have cost inflation there. One of the things that kept it with my target also was that we thought that the streaming services would do about $1 billion of operating income this year, but they did indicate that there is some incremental technology spending for a better recommendation engine and what have you. So I think that division is in repair, but I think that people have really come to accept that that's maybe not quite the parabolic or growth that was going to come out of the earnings loss period. So I think it's definitely on a trajectory that is regaining its momentum. So I think there is.
David, let me interrupt you for a second. Let's talk momentum and trajectory. Jason, I'm going to come back over to you. It wasn't too long ago, earlier this year, during this proxy fight, this stock was trading at about 120 or so. Right now, it looks like it's about 102, 103. As an investor, what are you looking for when it comes to not only the report, but the call, and also guidance on this succession plan? We're going to show some of the names that are being kind of thrown around as possible successors to Bob Iger. Dana Walden, the co-chair of entertainment, Jimmy Pitaro from ESPN, wide range of names. As an investor, what are you looking for?
Yeah, good to be with you this morning. And that's there's a lot to unpack in that question, so I'll try to keep it somewhat brief. I mean, there's a wide range of things that we're looking for. Obviously, looking for how the streaming business did. David touched on that a bit. We finally got to profitability. Now, the question is directionally, does that keep going up? I think Bob Iger has done a good job of turning streaming profitable. Of course, the parks are going to be important. We know that we've seen a moderation in spend. Consumer savings have come in post-pandemic. We've seen that revenge travel coming down. Excess wage growth has come in, and obviously interest rates are up, so putting that trip on a credit card has become a little more difficult. So parks have moderated, but the parks had a really big boom post-pandemic 21 through 23. So that's just kind of coming back down to earth. We think there's some normalization there happening. We're still bullish longer term there. I'm still looking at linear TV. It's a cash cow business. Yes, it's in decline, but the question is, where's the bottom, and is there the financial wherewithal there to support other growth parts of the business? So I'm still interested to see what's going on there. And then, of course, finally, I still think there's not enough focus on the studio business. They've had, I think, the two biggest movies this year have come from Disney. That's Inside Out 2 and Deadpool versus Wolverine. So commentary about the lineup to come, whether it's Moana 2, et cetera, is important because that's part of the Disney flywheel. At the end of the day, storytelling business that supports the other businesses when we have good storytelling and good franchise characters. So a lot to unpack. And then, of course, the CEO succession question. Just like Nelson Peltz, we're glad that Gorman is in the fold. He's a great business mind.
Jason, we might have different definitions of brief, but while we got you talking about this right now, I do want to ask. We heard Nelson Peltz say he believes they're going to have a new CEO as soon as next year. James Gorman said 2026. In your mind, is there a real urgency just to calm investors like you about the succession plan to do it sooner than later?
No.
Oh, that was brief right there. David, I'm going to come back over to you. Jason has some questions about the theme park business, and we often do talk about the consumer being a bit stretched, but we also talk about the bifurcated consumer. Higher-end consumers seem to have more spending power. You're really actually bullish about the price increases at the Disney theme park, in particular, the Lightning Lane Premier Pass. I'm sure a lot of parents know that. It probably rolls off the tongue if you have kids. 6% price increase, Lightning Lane Premier Pass. Why are you so bullish on that when we're all talking about consumers not having as much to spend?
Well, they do have a lot of flexibility and dynamic pricing for the regular kinds of tickets, so where they did have the price increases. The bullish aspect is that this Lightning Lane is an incremental product that they did not have before for the very well-heeled customer who wants to skip the lines, doesn't have to work with the phone app to be competitive with trying to get access to a few particular attractions. So I think that it's this new add-on for the premium experience, which you see across other sports and live events, that's going to be, I think, additive to their operating income. Again, it's a product that they didn't have in the past, but we'll see what the adoption is like. They really just started rolling that out.
All right, David, I'm going to give you the last word. Again, the estimate for streaming subscribers is 232 million. I've heard some people say this stock now trades on that streaming number. In your mind, I just want to kind of go back to that. Does Disney beat that estimate? Do they underperform that estimate? What do you expect in there, and how does the stock perform?
Well, on the core, higher price point subscribers, we do expect that they'll be adding 7 million in this quarter. So that's that's the net addition number that people will be looking for. It's possible that they could do a little bit better than that because they have been rolling out the new policy of cracking down on the password sharing, turning those into at the base level, advertising tier customers that come in at a lower price point, and then they can sell the advertising on it. So those are the two dynamics that really could help that subscriber number as they head to full year profitability.